Hey everybody, how's it going? All right, so here's our Tuesday's homework. We're going to look at the trade we just made, see what was good, see what was bad, what we can do better, what we did great at, etc., etc. So we can always be improving on this strategy. So today, my first trade was with VRPX. So watching it, it was looking like it was about to cross right here, right? We're starting to see some movement on all three of our verifiers, right? We got the chart going up because we got green candles. We've got the relative range going up, and we're starting to see preparations for a cross. So exciting stuff, right? So we're looking at it. We're getting ready to trade in. Now my trade was at 7:54 my time. So that was about right here. When we look at it, we see everything going right. The 9 and the 50 are being traded above. We hit an overbought scenario and we crossed. So looking at it, bought in. Problem was the very next moment after we bought in, they came back apart and were just riding, but they were still not crossed yet. If you look at your indicator here, notice how it's glowing red and has a minus. That tells you that these lines haven't crossed yet. They're just kind of real close to each other. See, the particular studies that you have only update themselves so often. And so you don't really know if it crossed then uncrossed immediately. You might be in it a few seconds before all of a sudden updates again and shows a gap. That's okay. You make the best decision with the information that you have. But we hit it on here, and then it uncrossed and stayed red the next couple of intervals. So the next couple of minutes. Now, when that happened, the next interval started to go down. We were still in green, so it was trading higher than the interval beforehand, but it was just kind of sitting. And that was a little scary for a minute. But if you notice, they crossed again, and we were still in an overbought scenario, even though it was going down. So when we got the next interval, it did go up, because that's what it does, right? I mean, 9 times out of 10, if you meet the conditions, you're going to get the result that you wanted. And we wanted a positive trending result. Now, we started to see this thing go down, and it started to touch and get out of overbought, which means the sellers are starting to take control of the stock. And because these were riding so close during this carryover here, we knew they were going to cross back and go down pretty darn soon. So I made a decision to put my stop right at 9.8, which is where this actually almost where this capped out at. I think it capped at like 982 or something like that. But I put the stop at 9.8. It filled when it hit, and that was my trade. We were able to victoriously claim 2.6% on our trade for that day, and that's pretty darn good. 2.6% is a 1.3% of our total account. Pretty darn close. So we hit it. Now, I'm actually really glad that we're actually getting some difficult scenarios on these trades, because it's great practice for us to learn the self-control and the lack of emotion it takes in creating exit strategies and knowing when to get out. Better for us to learn it now with our small account, so that as we're growing it, we know when to get out of position. And that's important, because if we start getting these particular runs where we are hitting 3%, 4%, or even more, we want to be able to know what it looks like when we need to get out of it. So that way we can seek the opportunities to get bigger rips when they are available, but we don't want to chase them blindly, because then if we do get anything, it's pure luck. And if we don't, we lose a lot of money because it goes down. So I'm actually really glad that we're taking these 1%, 2% clicks and rips off of these stocks now so that we can learn how to get out of them when we need to if we're going for bigger opportunities, bigger percentages. After this came down, it did go back up and it actually ended up hitting 10. So if we stayed in it, would we have gotten a bigger rip? Sure. If we'd have stayed into this all day, I mean, it went up to 14. Gosh, I might have even gone up to 16. I can't remember, but this thing went boom all day. And those are great for subsequent rips when you have enough money to be able to make multiple trades. But for right now, we just wanted the first successful stock that we see that meets all the conditions to get into it and then take the rip that comes available. Sometimes that's a 2.6% rip like today. Sometimes it's a 1% rip like yesterday. And sometimes it's going to be a 3 or 4% rip, which could possibly happen tomorrow or sometime in the future. We don't want to really mess with anything below here, because if we look, the sellers are taking control, and the relative range is starting to get into an oversold area. Now it didn't, and it came back up, but we don't know that. Everything that's happening, because we've got a red candle here, right? Now it's trading below the 9 because of the stock's going down a smidge. We got it down here. We have red on our histogram because we've got the death cross right here. There's nothing telling us that this will ever go back up and get an increase. So selling right here, when we start seeing all of these indications come through, is the best play. We have no idea. Remember, when you're looking at this stock, all of this stuff here doesn't exist. So woulda, coulda, shouldas don't mean nothing in a logical and professional arena. We don't trade with our guts. We trade like divas. You got to trade like a diva. You notice a diva won't get on stage until she gets everything that she wants before she walks out, right? Or I'm a diva. I want my brown M&Ms. You know, you want the champagne in the green room or whatever. You want those conditions to hit before you ever even get in. You want the best scenario you possibly can in order to take profit. The riskier the trade, the more likely you are to lose money. We don't want risky trades. That's why we allow all of this green to happen before we get in, because this is the support that says, hey, this is going to happen. And we get that cross, we get everything, and this is our trade window. Because of the scenarios we talked about that say, hey, we need to sell right here. Because none of this exists, we don't know what's going to happen. So after we get a lot of mess here. So we collect our 2.6%. We go over to our Nifty chart so that we can log it. 5 shares was $47.75. Closest we could get to $50 without going over. So we traded those 5 shares and we got $1.24 out of it. We log it in there. Our weekly total is $1.80 and our average is $1.90, or I'm sorry, not $1.90, but 90 cents per trade. So our total account right now is sitting at $101.80. That's a great job. It's just shy of 2% of our total investment. Doesn't seem like much with $100, but with $1,000, that's $18. With $10,000, it's $180. You trade $10,000 on that one trade, you made $180 today. Doesn't seem like a little bit of money at that point in time, does it? It's actually legitimate money that you can take home and pay your bills with. So slow and steady wins the race. Eventually, this will get to a $10,000 account. Then you've got a mid-level account where we can make multiple trades and capitalize on the things that are happening, like with this stock, that's going on in the early afternoon because we have enough funds to make multiple trades on positive trending stocks. So we just have to continue to stay diligent and make sure that we continue to stay green, slowly build the account until we get a mid-level account, about over $5,000, and then we can trade for some really, really good money. All right, that's all I got for you guys. Enjoy the rest of your day, and we will talk to you in the morning. Bye-bye.